Hello, I'm Ingrid Willinge and welcome to Media Week. Ahead on the show, why SevenWest Media believes in the future of free-to-air TV despite $1 billion worth of write-downs in its recent result, plus the latest readership and circulation figures for newspapers and magazines. But first, advertisers are twice as optimistic about ad spend growth in the year ahead than their media counterparts, with a shift in spending from paid media to owned media set to continue. In addition, social and mobile ads are expected to see big growth this year as consumers become more accepting of notifications and trackers on mobile devices. Well, for more on that, our co-host James Manning, editor and publisher of Media Week, is here, of course. And we're also joined in the studio by John Sintras, chairman of Starcom Mediaweek Group Australia. John, great to have your company on the show today.
Thank you very much.
Let's kick it off with that Media Futures survey. Modest ad spend growth predicted for the third year, but there is a bit of a discrepancy between what the advertisers are saying and what the media execs are saying. Just talk us through it.
So we're saying, seeing that the advertisers are feeling about 2.7% growth in paid traditional media, if you like. And the advertising executives are thinking about 1.3, so they're less optimistic than what the advertisers are, which is a trend we've seen over the last few years. A little bit jaded with all the change that's going on in the marketplace.
So you poll advertisers?
Yes, we do.
And you poll media executives, right? So this is the 30th year.
Yes.
What's the track record been like?
The track record, well, it's a long time to have been measuring, and the track record's been reasonably accurate over the years, but as the last few years have seen a lot more volatility. You know, the business has become so much more dynamic and agile, and we're seeing very, very quick reactions from marketers to consumer confidence and economic conditions. We saw that in the budget last year, for example. We track that every week with our consumer confidence internal monitor, and we saw almost an immediate drop in confidence. And very soon after, the growth that advertisers predicted for last year was pretty much wiped out.
Do you update that at all during the year? And
yeah, we do.
Historically, are there things that can change that, or does the figure you get now end up being pretty close to what it is?
It tends to be within 2 or 3%, which doesn't sound like a lot, but when we're only forecasting growth of 2 or 3%, then that wipes out the growth, and that's what happened last year. We did have a similar forecast at the beginning of the year, and the mid-year dip that had been wiped out as a result of the confidence dips.
There does seem to be this shift from cyclical to real structural change as the impact of dollars shift from sort of paid to owned media starts to hit. Just give us some colour around that.
Well, there's been a lot of debate about how cyclical is it versus structural. I think maybe 2 to 3% of shifts can be explained with cyclical movements such as the budget announcements and political instabilities we've seen. But we now have to admit that this is structural. This is the 4th consecutive year of very low single-digit growth, and you know that movement into performance media, more digital and social media, is absolutely here to stay, and I can't see us returning to growth of north of 5% anytime soon in the more traditional media formats.
Some of that structural change, there's a lot of money shifting to social, it looks like, to video online.
Yes.
Facebook is perfectly placed to benefit from that. If that trend continues and it's attracting a lot more dollars, a lot more video advertising, will that money start moving from where?
That's a good question. Let me just, I'll just double back. We've seen a maturing of the move to digital media. So we're not seeing the crazy growth that we have been seeing in some of the older digital channels, such as search and online performance, etc. What we're seeing is massive growth, though, in the mobile and the social platforms, with growth well in excess of 20%. And there's been talk about mobile being the next big thing for a while. This is the year where we're really expecting marketers to go, right, we can't wait any longer. We do have the highest smartphone penetration, one of the highest smartphone penetrations in the world. Consumers are expecting this sort of precise and more individual notification to start happening, and we're really experimenting and figuring out how to make that real and viable for marketers now.
For the first time in this survey, advertisers were asked about dynamic creative online ad solutions. So what falls into that?
I didn't even say
that. I know, I had to look at my notes to read it. So what falls into that category?
This is the notion of precision marketing and addressable advertising, the idea that you can know very precisely who is receiving the message, what they're interested in, what they're doing at a particular point in time, and where they're at and who they're with, and to be able to serve them a message that's specific to that context. And that's putting heaps of stress, maybe the wrong word, on how do you do that? How do you become more agile? What data feeds do you need? What data management platforms do you need? And how do you create content? You know, hundreds of pieces of content that could be served within a nanosecond, depending on what's happening, and that's that's an exciting opportunity.
And more advertisers are using that, going to use it this year, right?
Because culture is really quick. You know, people have become so used to the Twitters and the whatever telling them what's going on in a moment. Entertainment culture is in and of the moment, and they're expecting, therefore, messaging of any kind, whether it's commercial advertising or entertainment-based, to also be culturally relevant and of the moment. And that's a real exciting opportunity for marketers.
Tell us about how advertisers are observing the willingness of consumers to get all that messaging. I mean, there used to be a thought years ago that, look, you can't interrupt me, you know, but that a lot of people now seem to be happy with that. We see it on reality TV. There's a lot of integration, which doesn't seem to negatively impact on the audience figures. Can we expect that in mobile? People are, you know, they find it as useful information?
I think we've learnt a lot about what does and doesn't work, and certainly in the old days there was a lot of discussion about church and state, and you can't pollute content, and you can't pollute entertainment with commercial messaging. But I think marketers have become savvy to that. People don't like stuff that's irrelevant and boring. People want to be entertained, and people want stuff that's personally relevant to them. And when that happens, they do engage, they do lean in, and they do share it, and they talk about it, and they advocate with their friends. So it's about the quality of the content, and it's about being culturally relevant and really understanding what people are engaging in and talking about, and how to make it shareable and how to fit into communities.
Because do you see consumers happier to get sort of push notifications, location trackers? Obviously, there are privacy issues. People are kind of concerned about that. Are people becoming more and more accepting
we're tracking
of that?
And we are seeing that when people opt in and share where they're at, they do get an enhanced experience for the most part. So when marketers get that right in terms of the messaging, then I think that will build the acceptance and the confidence for people opting into this sort of push notification over time.
Yeah, that early days of direct marketing used to just spray everywhere, and that's why you'd get a lot of negative.
It wasn't that direct.
You get cold called at home, whether and there's no intelligence on whether you're a potential.
Well, it wasn't precise, but I think the watch out for marketers is it's not just about precision targeting. You know, we need to develop campaigns that people are excited about and want to be part of. And then the precision comes underneath that. It's, you know, it's something that my community and my friends care about and are talking about. And underneath that, there's something that's really personally relevant for me, my family, my friends as well. And that sort of blend is really powerful.
Can you just tell us a bit about your role more broadly at Starcom Mediaweek Group, and how's Australia also faring, the international role, and how's Australia also faring in sort of trends and innovation in advertising?
Okay, well, I chair our Australian operations, which is great, but I'm also lucky to have a global role. So I oversee all of our global product quality and innovation, our Centre of Excellence. So I do get to look at all the work across the world, both internally and externally, which is always stimulating and you always learn from. Australia absolutely punches above its weight. We see it in all the major festivals. You know, Festival of Media in Asia is about to take place in a few weeks, and again, the Australian work is really standing out. And in terms of our own network, you know, we've just been recognised by our own global company as the best office in our global network across 110 offices. So Australia's absolutely at the forefront of transformation and disruption. You know, we're disrupting our business every day and reinventing what we're doing. Every day. You know, 50% of our revenue didn't exist 5 years ago. We've had to really change the game and respond to what clients' needs are. And Australia's absolutely at the forefront of that, which is really exciting.
Yeah, good to hear. We'll have to leave it there, John, but great to have your company on the show today.
Thank you. It's great to be here.
John Sintras, there, Chairman of Starcom Mediaweek Group Australia. And just moving on now to reporting season, because it's been continuing this week with a few big media company names reporting. SevenWest announcing a sharp fall in earnings to a $994 million interim net loss. Also comes after the company wrote down the value of its television, magazines and newspaper goodwill. We also saw Fairfax Media beat expectations with a net profit of over $26 million, also announcing it would buy back up to 5% of its own shares. The media giant citing higher digital subscriptions and growth in domain as an offset to the further decline it saw in print. Well, for more on that, we're joined by Evan Lucas now from IG. Evan, great to have your company on the show. It seems digital strategy might actually be working for Fairfax. What do you make of the result?
Yeah, it certainly is. And I think the way you've got to also look at it is if you listen to Greg Hayward, anybody that was listening to him is talking about domain, and that's certainly what he's concentrating out of these results. They were good, I will say that, and obviously his current structure around that with that sort of JV idea around their advertisements to advertisers is certainly working for them. But if you look compositionally, the result was actually fairly in line and a little bit benign in terms of what the market was expecting. Well, the initial reaction when we did see the drop was good, but over the sort of the period as we sort of digest the result, it's been okay. Having a look inside it, you did see the metro media once again decline. You also saw radio declining. So although digital is doing very well for them, their traditional medias are actually still in remission, and that's probably why the market result and the market reaction to it's been pretty poor, is probably the way to say that. And again, also you've got the Gina Reinhart overreaching arc in the fact that since she's left, it also hasn't seen a recovery on that as well. So okay result, as I said, from digital, but probably not enough to offset what's going on in the traditional media space.
Charges, but management is still pretty confident on the future of free TV.
They are indeed. And look, it's interesting. I think the one thing that probably from a market perspective that you need to look at, yes, you just saw a huge write-down in goodwill, particularly in TV, as you just alluded to. But from what we are looking at is the fact that they are continuing on with their current dividend strategy, which is 12 cents we saw at the last. That was actually ahead of the market expectations. It's probably why you saw an initial jump in the share price. But if you actually have a look at that and then equate that back to the balance sheet, the fact that they are seeing, particularly in the second half of this year, that revenues maybe aren't as strong as they expected. TV advertisement numbers aren't coming into the same sort of level. They're seeing debt to equity now at around about 2.8 times, and that starts to put the balance sheet under a little bit of pressure. They've got some convertible notes coming up as well. All of that is building, so there is a bit of nervousness around, once again, the issue with SevenWest Media for a long, long time has been debt, and maybe they're stretching that again. And also, like with Fairfax, their print media was also a little bit dismal, is probably the only word I can use. They did see a fairly big write-off there, and again, a fairly lacklustre performance from Western Australian News.
All right, Evan, thanks so much for that.
Thanks, Ingrid.
Evan Lucas there from IG on those results. Let's return now to James Manning in the studio. James, did you see some worrying indicators out of that SevenWest result?
Yeah, as Evan mentioned, I think the print products, a lot of challenges they face, the magazines, Pacific magazines, West Australian newspapers. One thing to remember about Seven, that's what Tim Warner reminded us, all their different divisions help. They have content that goes right across, like My Kitchen Rules.
Yep.
They'll do a lot of that online with Yahoo 7. The magazines will help support that. So the big brands are all helped by the other divisions, if you like. So that's something to bear in mind. But individually, some of those things didn't look good. Yahoo did okay. There's a bit of talk about HBB TV, but look, gee, that's one of the analysts asked, have you got any audience numbers for that? And they said, no, look, we're where we expected to be, and that's right at the beginning of what's going to be a very long road. Look, I tried to buy an HBB TV myself while the Australian Open was on, You couldn't get it for love or money.
Yeah.
Nobody knows about it at retail. So, I mean, Samsung TV is apparently going to come on stream mid-year, so I think it's going to be a long time before that starts having an impact. One of the things, maybe the live streaming of the Australian Open, which they did on, I think they had an app for that, and I think that did some really pretty good numbers. So I think that might have been a bit of a revelation to them about, look, yeah, this is an area that's going to be easy to get a lot quicker take-up than the HBB TV.
I want to talk about some comments Tim Warner made as well. He said licensing fees should be axed. He was quite vocal about it. Yeah,
look, he's been pushing this for a while. He just thinks, look, internationally, we pay, Australian networks pay a very high fee for their licences. But, some people say, OK, well, look, if you get rid of licences, you're prepared to open it up to competition, give out licences to other players. And I think they'd say, well, no, we don't want any other competition.
Sort of goes both ways.
Yeah, so some people say they want their cake and eat it too.
Yep.
But would people, if you gave out free-to-air TV licences, would there be a big queue to get them? I don't know. I don't think there would be. I mean, Channel 10 having a lot of trouble selling their licence. Sure, they're not giving it away, but the capital costs for TV, would people come into it, You can get a YouTube channel for free and reach, globally a really big audience just like that. So,
Hey, we also heard from Fairfax and a bit about the Stan numbers. Tell us what we heard from them.
That was probably one of the more interesting things in the Fairfax results this morning. Greg Hayward talked about Stan. It's been going roughly, I think it launched Australia Day, January 26th, where, nearly a month in. He said by mid-March they could have had 100,000 people registered. So it's not a bad figure to start with. But the key will be, will those people stay on and start paying that $10 a month fee? But these 100,000 people, they've registered with their credit card, you know. So if you do that, I'm thinking, well, you're already thinking, I'm probably going to be paying some money here, you know. So I think the percentage of people who stay on could be quite high out of that 100,000.
More and more competition in that space, though, going forward. Yeah. All right, we just have to take a quick break on Media Week. Coming up next, though, off-screen drama surrounding the House of Hancock. Did it help the ratings, though? We'll tell you next.